The bank is just going to give you thousands of dollars. What's up, Alex? It's Guys here. Welcome back to the fourth and final episode of our BRRRR series, the coldest real estate investing strategy known to man. I've taken down dozens of properties using this strategy. On top of that, I own a real estate company here in Austin, Texas with over 150 all-star real estate agents. And in the years that I've been doing this, I've learned a lot. So I'm giving you videos like this one today so that you don't make the same mistakes that I did when I was starting out. If you've been following along, you've learned all about how to buy, rehab, and rent out an amazing investment property. You have watched those videos, right? Well, if you haven't, then you gotta go watch them. It's 3 quick and easy videos that will blow your mind. And if you watch them, this video will make much more sense. And cents adds up to dollars. So today I'm going over the next letter in BRRRR, the next R, and it stands for refinance. At this point in the investing process, you own a great investment that is fully rehabbed and occupied by a great tenant, but you're in a short-term loan. The hard money loan that you got to take down this property has a 12 to 24 month term, and that loan is going to be called in full at the end of that term. So you need to refinance and get a new loan that has a longer term, like 15 or 30 years. But the value of the property has significantly increased since you bought it, right? More than likely you bought it and walked into equity day one. But even after that, you fully rehab the property, and in the time that you've owned the property, it is appreciated with the rest of the market. So I'm going to tell you the process of refinancing, plus all the tips and tricks that make sure you get the most amount of money in the most seamless way possible. You're about to start swimming in the Benjamins, baby. Oh, and speaking of Benjamins, I need you to hit the button.
How old are you? 7.
The like button.
God bless you.
It means a lot to me and the YouTube algorithm. And every like on this video equals one happy little Benjamin button. Okay, now let's dive in. So you don't just want any new loan, you want to do a cash out refinance. Whenever you refinance, you're starting over with a new mortgage that has different terms. Refinancing can be used to get a new interest rate, change the length of a mortgage, or to add or remove a borrower. Any of these goals can be accomplished without changing the amount borrowed. But if you want to take down more deals, then pulling out cash is the way to go. With the cash out refinance, you're getting a new loan with a higher principal than the current mortgage that you have. The difference between your new loan amount and the amount that's owed is where you get the cash out. The amount of cash that you can pull out depends on your property's equity. In other words, how much your home is worth compared to how much you owe. Here's an example using ridiculously simple numbers. Say your home is valued at $200,000 and your current mortgage balance is $100,000. That will give you $100,000 worth of equity in your home. You could refinance your $100,000 loan balance for a $150,000 loan balance and receive $50,000 in cash at closing. The lender you're working with will require an appraisal to assess your home's current value. And if you're lucky, the same lender that got you the hard money loan will be able to get you some sort of other long-term financing. But that isn't super common. So you may need to look for a lender who can offer you a great deal with great terms on a long-term loan. As I mentioned in previous videos, the all-star realtor that you're working with will have resources to find this lender. But ask around to your friends, family, and investing network. You should allow yourself enough time to shop around a bit to find the right lender who can offer you the best terms and has the goals that align with yours. This lender may not be the typical lender. You may be able to find a private lender who can offer you an amazing loan that is beneficial for both parties. Now, getting a loan isn't as simple as just saying you want a loan and then poof, it happens. There's a whole process that goes into this. And lenders are going to look at many factors when you go to apply for a mortgage. They'll examine your income, your job history, credit score, debt to income ratio, assets, and the type of property that you're looking to refinance. You'll be responsible for providing them with all the relevant documentation that can prove your viability to qualify for a loan. This is the most tedious and time-consuming part of the process. I would recommend creating a folder on a file or a hard drive with all of your documents. And I'm talking about everything. Tax returns, W-2s, leases, 1099, anything and everything that might be relevant to the lender. They'll also ask for bank statements, but that's fairly simple to just hop online to your account and download the PDF. To get fully approved, it's also going to include underwriting the property and an appraisal on the property. The appraisal is going to depend on what properties that are similar to this one have sold for in the same area. So you'll have a good idea of what it'll appraise for because you ran comps before you even bought the property. After the appraisal comes back, the lender will be able to tell you how much it's worth and how much you'll be able to pull out. You'll have to pay closing costs, but that will come out of the cash that is in the property. So you won't be coming out of pocket, it's just a cost of doing business. The last thing I'll say on this is don't get over leveraged. You only want to pull out enough. You may be able to pull out a ton of cash, but it might take your monthly mortgage amount too high. You want to keep your mortgage low enough to still break even or cover some cash flow. You want to keep your mortgage low enough to still at least break even. You may have the ability to pull out 5 or 6 figures in cash, but if it makes your mortgage $4,000 each month and the current lease is only bringing in $2,000 per month, then you may not want to do it. Sure, you have a lot more money to go and buy and flip more properties, but you'd be losing money every month on your current property. You want to look at your portfolio as a whole and not just each property individually. Don't try and grow too fast. Be wise and don't get over leveraged. You want to be in this business for the long run. You want to create wealth for generations and not just make a quick buck. So talk to your lender after you run the numbers and only take a loan that makes sense. Now, there's only one letter left, the last R. But we don't need to do a whole video for that. It is simply repeat. Take the cash out that you pulled from this property and go buy another one. Go through the whole BRRRR process again and again and again. So this series, you've learned how to buy a property, rehab it, rent it out, and then do the cash out refinance. So what are you waiting for? Get out there and go put these steps into action. Opportunity is waiting for you. But before you go, drop some comments below with what you want our next series to be. And if you have a question, drop that below too. I promise to personally respond to every single comment that we get. Thanks again for watching today. Do not forget to subscribe, and I can't wait to see you in the next series.